So hi guys. I hope you're all doing well. Welcome to this video where you get to look at the difference between major and minor zones, major and minor supply zones. Major and minor supply and demand zones. How are you able to identify these zones and how are you able to tell a zone is either a major or a minor level? So welcome on board and walk with me through this session as we get to see how are you able to distinguish or differentiate between a major level and a minor level. All right. So whenever you're plotting these levels, okay, let's even start with the very basic of plotting the levels. So whenever you're plotting these levels, you always have to plot them from the line chart, okay? You get to plot them from the line chart. Let me make these a clean chart. Then we start from the very basic of plotting these levels, right? So you can see starting off, these are very clean chart. So anytime you are plotting your supply and demand zones, it's important the first step is going into the line chart, okay? Because anytime you're plotting our zones, you're plotting from the line chart. Then I usually start off from the daily time frame because the daily time frame usually gives a bigger picture scenario or a bigger picture bias. So you're able to see what you are anticipating for from a bigger picture time frame. Now, considering I am a swing trader, so definitely my plays are usually like long term kind of trades. So that is why I usually focus on the bigger picture time frame. So here, this is the daily time frame. So I'll come plot this level like this. So anytime you are plotting any zone, you usually identify the peaks and areas where price has bounced off several times. For example, here this is the peak, then this is the area where price has bounced off several times, a level like this. Then here we have this is the peak, then an area where price has bounced off several times like that. So and that is how you get to complete your zone. So when you are plotting now the zone, you have somewhere like this is the peak, then an area where price has bounced off several times, like that. Then get to demand again. This is the peak. Uh, then an area where price has bounced off several times you have something like that. So you feel the full zone like that, all right? Now, when you come to back to the candlestick chart, you can see the kind of reaction and how we have picked up that zone, all right? Remember, we are always looking out for the peaks and areas where price has bounced off several times. Now, for the peaks is both for supply and demand. So the peak is the highest point and also the lowest point on any given chart, right? So this is a very good example on how you get to plot your supply and demand. You can see these on the daily time frame. Then if we are still to continue going lower, I will add a level like if we are still to continue going lower, I'll add a level like now. I have a scenario like this, then an area where price has bounced off several times. So bring these like that. Okay, so you have an area like that. Then if I want to extend it like an area like this one, because here again you also have a level, so I'd have a level like that. Then no, not even like that. So I'd have a level like this. Okay, you have a level like that right there, or even from this level here. So you have to be very careful and very keen on how you plot. You have to be very careful and very keen on how you plot these levels so that you don't end up messing up on your plotting, all right? So that you don't end up messing on how you plot your levels, all right? So now we have that, and when you bring back the candles, this is what we have, a scenario like that. Okay. So this is what you have. You can see we have the levels that I've plotted based off the daily. These are major levels. All right. These are major zones. Yeah. Now, characteristics of major zones. Number one, major zones are usually on the higher time frames. Like now, the daily, the 4 hour, sometimes even in the weekly, those are major zones. The next thing about major zones They don't easily break, and the moment they break, price usually comes to retest those areas. Price usually comes to retest those areas. A very good example, look at the kind of reaction that we are seeing from these are major supply. These are major zone here. You see very strong reactions. Major zones have the highest major zones have the highest supply and demand imbalance. Like now you can see the strength of the move out of this zone all the way to this demand. Then the strength of the rally from this demand all the way to this supply. The same back to this demand. The same from demand all the way to this supply. From supply all the way down like this. So these zones usually reflect the strength of the move, right? So the major zones usually have the highest or the greatest supply and demand imbalances. So uh, we have that. Now, these are the major zones, all right? We've plotted the major zone based off the daily time frame. Now, how are you able to identify now the minor zones? Now, something about minor zones, they get taken out all the time. Then another thing, they have a lower supply and demand imbalance compared to the major ones, the major zones. Like now, for example, I will go to the 4 hour time frame and see we have a level somewhere in the middle, more like a mid-range. So I'll come plot this line like that. Then we have a mid-range somewhere here in the middle, right? We have a mid-range somewhere here in the middle. So that is something like now, that it now looks like something like that. No, let's even have it like somewhere like that. And now like these, uh, like that, right? Now, this being a minor zone, right? These are major zone, these are major zone, these are minor zone. If you now bring the candles like this, you can see the number of times price reacts at this zone and the number of times it gets taken out. So you can see how easily it gets taken out from areas like these. You have areas like these again acts as supply, areas like these again acts like supply. So you can tell the number of times the strength, you can tell the number of times price breaks above this. You know, it keeps getting taken out, all right? That is one of the major characteristics of a minor, that is one of the major characteristics of a minor zone. It usually gets taken out quite often, all right? Then you can be able to get entries from these now even on the lower time frames if you come to the 1 hour the 1 hour time frame as well. The minor zones can be good area for potential levels of entries, right? The minor zones. Now the major zones can be used for both entries and exits because now the major zones you're used to determine where is price going to in a bigger picture scenario or on a long term kind of scenario, right? So whenever you're taking your trades, especially now, depending on the type of trader that you are, whenever you're taking a trade, usually at least make sure that your targets are based off the major zones. Then something to note about the minor zones is that they are easily broken, right? The minor zones are easily broken, and they're usually best found. They're usually best found in the lower time frames. Okay, so they're easily broken and they're best found in the lower time frames, and they are also the ones that are responsible for minor ranges. So forming minor ranges, although sometimes some minor ranges can form within major zones, but majority of the minor ranges are formed with the minor zones. All right. So it's important anytime whenever you are plotting these levels, you get to understand the difference between the major zones and the minor zones, all right? Because they do have a very big difference. For example, let me take, let's say, Euro USD. Let me have one that I've not written anything on like that. Ah, this one even already has zones or something like that. Now, if I'm to start plotting these again, so. Mm, I'm to start plotting this again. I'm gonna have this kind of scenario. So remember, we mentioned we start from the line chart. So you come to the line chart, then this is what you have right here. So I'll remove this, then I'll remove that. So this is the peak. This is the peak, and this is the area where price has bounced off several times, like that. Then here you have a peak to the downside, then an area where price has bounced off several times, something like that to form the zone. Then now in the middle here, there's definitely a zone here in the middle. So for this zone, you have the peak is here. Then the areas where price has bounced off several times is within right that area, like that. Okay. Then you can also have another one just in case. We can have another one somewhere around, and have one down here, the very, very, very bottom. hmm Around that level down there, like that, right? So you can see how this area is. We have the major zone. The major zone is let me see. So the major zone is, this is the major. This is a major. This is a major. This is a minor. This is a minor zone. And then now this one is a major zone, like that. All right. So it's really important you get to distinguish between the major zones and the minor zones. All right. It's very important to get to distinguish between the major zones and the minor zones. And the biggest part in that is in how you plot the level. Always remember, whenever you're plotting these zones, you look out for the peaks and areas where price has bounced off several times. And that is the peak both on the supply and the demand. All right. So you have to look at the peaks and areas. I mean, you have to look at the peaks and areas where price has bounced off. You have to look at the peaks and areas where price has bounced off several times. Okay. So we have that. So now it's now a matter of practice. Okay, it's a matter of putting in more practice into how to identify these levels, how to get to plot them, then how you're able to identify them, then how you're able to use them in terms of your taking your trades. All right. Now, doing this over a period of time, practicing this over a period of time is what makes it perfect. So you have to be able to get to practice this over a period of time every single day, putting in the work and the effort to be able to learn and understand how to identify these zones. All right, get to see the major zones, like I've mentioned. They're usually basically on the higher time frames, the daily, the weekly, the 4 hour time frame. Then the minor zones, they occur from the lower time frame, let's say H1 and below. Sometimes you will find the minor zones that are also on the 4 hour time frame. Okay. Sometimes you'll find minor zones on the 4 hour time frame. In case you find a scenario like that, then you will get to go to a time frame higher, which is the daily time frame, to look for to look for the major zones, right? So I'm gonna still do more and more videos on this so that guys can be able to understand on how to differentiate between the major zones and the minor zones, how to be able to spot them on the charts, how to be able to use them for entries, how to be able to make good advantage of these levels. All right. So that's it. That's it from me, guys. That's it from me, guys. So make sure you get to practice hard on how to plot this level. Always remember the criteria. Identify the peaks and areas where price has bounced off several times. Then now you do that from the daily, then come to the 4 hour, the 1 hour, like that. Right? So that is what will really help in guiding and shaping your trajectory in terms of when zones are concerned. Right? So with that, guys, I'd like to wish you all a very amazing rest of your day as you get to start off the new trading week. I wish you all a very amazing rest of your week. Have a productive and people week. Let's get to catch up on the next one. So cheers, guys. Stay blessed and stay financially literate, and we'll get to catch up on the next one. So cheers, guys. Peace.